Hey everybody, it's Pete Renzulli. Welcome to Stock Trading Pro. Today's Stock Market Live, we got a bunch of stuff to talk about. You might be wondering, what bullish price action is he talking about and where are we going to find the best stocks to buy today? You got to dig a little bit deeper. If you happen to be in our Discord community, one of the biggest things that we've been harping on, something that I took from my trading floor, which is a really big thing that most retail stock traders really don't know how to do yet. And we're going to get into that in a second, which is you have to learn to work the list. So once you come into the day, the week, or the month, and you have this big list of stocks that you plan to trade, maybe for that day alone, it might be one of the best stocks to buy now at that moment. You still need to work the list. So in other words, you have a list of stocks, whether it's a group of stocks, a sector of stocks, just a random list of stocks that you like to buy every day. Sometimes you have the best ideas that don't follow through, and that's perfectly fine. And quite honestly, it's perfectly normal, something that a lot of retail traders still have to learn. You still need to get in there and dig out some other ideas. One of the biggest things we've been talking about recently has been you got to kind of put your overalls on, get your fingernails dirty, and go dig out that money. It's not hard when it's obvious. It's in those moments when it's a little bit tougher, you really show yourself how bad you want it by going to find the money. Something else that's really important in this market, and I know we spoke about it on a previous YouTube video where we talked about the different types of risk we should be looking to take based on current market conditions and current likely profit targets. So let's use Andrew as an example. Hey Andrew, how's it going? So what we're going to talk about is depending on how obvious the market is. So if we kind of just do a quick deep dive into the market, and we're going to get into the news in a second. Be very, very hard right now. And if we go over to the SPY to say, wow, I just can't wait to buy stocks right now, right? Obviously, this 360 level, we're going to talk about that in a second, a big magnet for the market right now. But we have to make a distinction between this and looking to be a buyer versus this and looking to be a buyer. There's a big, big difference in the down move here during this bullish move and the down move here during this bearish move. We're actually going to get into that. We actually have a good question today that I want to review for everybody. I'm actually going to pull it up on the screen right now. So I'll give you a little bit of preview. Short covering. Is short covering something that happens because of an unexpected rise in stock price, or are the shorts taking profits? Now, one big thing about that question, which is super interesting, is short covering is a part of a bearish tone to the market. So if you get a rally in a bullish rally, that's not short covering. We're actually going to talk about the language. If you don't know, I had two trading firms in New York City, and it was kind of fun because you would actually help other traders in the room by calling out your trades. But here's the most important part of it. Your language that you called those trades out with had to be very specific. So in other words, if you said, I sold Tesla stock, that would mean that you bought the stock and then you sold it, which means that Tesla was in a up move or a bullish order flow or a bullish trend, right? So if you say, again, let's use Andrew again, or let's use Frank. So if you say, Frank said, I sold Tesla, that means that everybody else on the floor believes that Tesla is rallying and going up. But what if Frank made a mistake and he actually sold Tesla short and he used the wrong language on the trading floor? Well, at that point, if everybody sees it's going down, everybody would take crumpled up pieces of paper and throw them at him because he gave everybody in the room the wrong information. So selling versus selling short is very, very different, and it's valuable language to know and also valuable language to say out loud to yourself so you're not fighting the current order flow. So I'm actually going to break that language down for you in just a second. What I have to do right now, just stick around, be back in just 1 second. I have to show this disclaimer. Okay, so thanks so much, everybody, for being here with me today. So I'm actually going to bring this into the screen, and we're going to talk about this here, and then we're going to get into the best stock pick. So short covering is something that happens because of an unexpected rise in price. No, it's because shorts. So getting back into the language of what we just discussed, everybody knows how to buy a stock. All right, let me actually bring this down a little bit more, and let me actually make this format a little bit bigger so it's easier to see. And right there. So we buy a stock, and that leads to selling the stock, right? Everybody knows that. That means that we're looking for the stock is going up, right? That's very, very important. But if we use Tesla as an example again, if it's going down, you would actually say, I shorted the stock. Shorted the stock is very, very different than selling the stock. Now, what's confusing sometimes to a lot of people is they're actually the same thing, where you might have seen on your trading software, you might have seen where some softwares do not have a button that says short sell. Some softwares just have buy and sell, but it's actually the wrong language to use. So you want to get ready for that, because you have to acknowledge that there's bearish order flow, which means selling pressure is dominating the market at that moment. Now, here's where it gets a little bit tricky. It's actually really simple, but you just want to get the language correct. So when you short sell a stock, that means that you're believing that the stock is going to go down, right? To exit that position, you are covering it. So that's where the phrase, I'm sure everybody's heard a short covering rally. So you actually, this is why it's kind of fun, because you get a lot of information out of that. So if you have a move to the downside and you hear on CNBC or on YouTube or something like that, where somebody says, don't get too excited about that, it's a short covering rally. Short covering rally implies that there's bearish order flow, and the people that sold that stock short, and we'll get into what that means in a second, they are exiting that short sale position. Now, here's why it gets really important. And the big question we get all the time is, how do we separate the difference between short covering rally and when a new trend begins? And I'm actually going to show you something in the S&P 500 yesterday using the SPY ETF as one of our signals to understand a reversal and the difference between short covering rally and what happens next. Now, I just want to finish up the language here because it's very important. So you probably heard short covering rally. Now, the part that a lot of people just need to learn a little bit is that when you exit your short position, you're actually buying back your short. So again, getting back to the language, you don't want to say that you bought the stock back. You don't want to say you bought the stock, because technically you are exiting a short sale, which means that the stock has selling pressure. So you always want to say, if you short and exit, you want to say you covered that position. Very important, very, very important, right? Let me actually make sure I get that correct. So how does that apply to what we're looking at right now? Be like, let's actually try and make this as actionable as possible so that you can spot this. Now, I'm going to show you on a 5-minute chart from yesterday. If you're not day trading stocks, don't worry about it. The signal and the pattern that I'm about to show you works in every single time frame. As a matter of fact, you can use it more often on 52-week lows and 52-week highs. So you could run scans for 52-week lows and 52-week highs, especially on 52-week lows. And you're going to look for the pattern that I'm going to show you right now, which, again, if you're day trading yesterday, the market actually had a 2-hour rally. Now, if you're not day trading, don't worry about that. I promise you this pattern works on a bigger picture. So we're actually going to hop on over and we're going to take a look at the S&P 500 from yesterday. We're going to get into this 360 level in a minute, but we want to go over here, right? So what we're talking about right now, remember the language that we're looking for. We're looking for, and everything that we do, order flow and tape reading. Order flow is it obvious? Tape reading is it still valid? And that's really a part of the stock market that a lot of people get into trouble with, is we can all sit back and be like, yeah, it's obvious, right? But the problem is, how do we know when it changes, and what do we do about that? So what I'm about to show you is one of the patterns. It's known as a failed test. And essentially it tells you when the existing order flow or the existing trend, as a lot of people might know it, has changed. And this is where the difference, this is why we actually just talked about short covering. So if we get back into short covering and talking about here, the difference between buying back your short and buying a stock to go long is how we recognize if that order flow has changed. And we're actually going to bring this all the way back into the best stocks to buy now, the energy sector that we've been watching for a while, and a couple of pockets in drug manufacturers and those stocks that we're looking at. So we're going to hop on over. We're going to take a look at the market, but I want to show you what this looks like right now on the charts. So if we take this down move here in the SPY, what we're looking for is when we make a new low. And again, this could be a daily chart. It doesn't matter if it's a daily chart or a 5-minute chart. Both of those mean the same thing. All that matters is you're measuring an existing price action. Okay. So we see this move to the downside. And the most important part is we make a new low. When we push down to a new low and rally off of that low, we all know that when let's use the upside. If we push up and pull back, that's a natural function of the stock market. Typically, we see a pause and then a push up again. So that's the big part of what we do, a push and a pause. We make money during the push. We manage risk during the pause. That's where we find the optimal entry. If we do that on the downside of the market, like we had yesterday, we pushed down and then we paused. Now, in a bearish price action, when we're going to the downside, a push down and a pause typically leads to another push down. But what if that fails, and how do you use that information? So if we push down and it bounces and keeps going, that's when short sellers are covering because they're getting out of that position. Now, the next part of the trade is recognizing when new buyers stepped in and when it's time to look in the other direction. Now, a lot of people got caught on this at the end of 2021 into 2022 with the stock market, where we had a very clear failed test of the high, and that led to the bear market that we're seeing in 2022 right now. And I'm going to walk you through that. Trust me, it's super easy. Once you see it, you can't unsee it. It's actually that fun to watch. So if we're looking now, we're looking at short covering into new buying and how to spot that every single time. Okay. So we're going to head back over to the chart. So we have this push down and a pause, right? So the next move should be to the downside, but that did not happen. This new low did not get taken out on this move. So now we have to step up and say to ourselves, okay, this push should have pushed down and it did not. So now we have a 1, 2, 3. That's it. Keep your trading as simple as possible. Once this level does not get taken out again, because it should have, we now have to sit up in our seats and say, okay, in this case, shorts are covering. Now we need to see if buyers step in. And the way to know that is when the rally off of the bottom gets taken out. Now, what's kind of cool about this is we push down, we pause, should have went down, did not go down, and then we broke the level where we rallied. Now, what's really fun about this is the first sign. This level right here where we push down, pause, and break, that's short covering. That's important to understand. So what we're trying to get across to everybody right now is the difference between short covering and then when new people step in and now fresh buyers step in. And this is kind of cool because the same level where the short sellers failed is the same spot where new buyers usually step in. So again, I promise once you see this, you're not going to be able to unsee it. And I'll show you this in the market in a big way, because if you were in our community, we talked about this for probably 2 months prior to it happening. And then when it unfolded, we were prepared for it. And when the market started to come down, the stock market started to crash a little bit, we were on top of it because we had this pattern in our back pocket and we spotted it. So when that happens, again, push down, pause, should push down, did not, broke, right? This is where the short sellers came in. But what's kind of cool here is this. That's the move that everybody misses and is looking for. When we rally, pull back, and then hold that same level. I mean, look at it's almost to the penny, the same exact level yesterday. That's where we ignited this move in the market yesterday. And be like, oh, that's great, right? We had the same exact thing on the other side of the market, which was up here. And you can, depending on where you want to draw it to, but we had a new high. We pulled off that high, and then this rally right here did not make that move. So we have 1, 2, 3, and then we had a breakdown, which led to that move in the afternoon. And let's actually go out to the daily charts, and you can see this on a little bit longer time frame. So you can see over here heading into 2022, we had a rally, a decline, and then a failed test. So going all the way back into January right here, January of this year, you could now have spotted that market reversal. So this is the big thing. What kind of difference in the way you look at the market when, again, just keep it in the context of the only things that matter. There's so many other things. I'm going to talk about some other things like the inflation numbers that are going to come out today, the Fed minutes that are going to come out today, the bank earnings that come out at the end of the week. All of that is great. But if you want to keep your trading to where you have absolute conviction in what you're looking at, you need to say, okay, how do I know if it's still valid Is it obvious? And how do I know if it's still valid? But more importantly, how do I know if it changed and what do I do? So if we go back out to, and again, I know this is kind of like looking back, and if you're stuck in positions from early in the year, use the information now going forward. That's important. Mistakes are only mistakes if you don't learn from them. So let's all learn from this together right now. So if we go back to the beginning of the year, here's the 1, 2, 3, right? That's where we failed, right? This failed to make a new high. You got to sit up in your seat and say, wait, something changed. Maybe you're not going to get involved or make a change of a decision quickly, but then look how amazing this is. Once, twice, 3 times, 4 times it hit that same level and couldn't get back through there. So even as early as March, when you were still in a pretty good spot in the market, you had to sit up in your seat and say, you know what? I don't know if that 2021 buying pressure is still valid anymore. And then you step up and you make decisions and you decide, do I want to move up any trailing stop losses? Do I want to reduce my positions because something changed? Quantitative easing and the Fed was not on the table anymore. And that's how things changed. So if you want to look for these kind of patterns where you're, especially on the buying side of the market, and we're going to get into the energy stocks in just a second, it's very easy to scan for. All you're going to look is for 52-week lows. And when you scan for 52-week lows, you're simply going to look for when they bottom out and rally. So if something's making a 52-week low, that means that there's bearish order flow and selling pressure. So you're not looking to buy the bottom. You're looking for proof from the market that the bearish order flow has changed. Now, this is a big part of it too, because we've been talking about this a lot recently, is the difference between aggressive position size and initial position size. So one of the things with how much risk we should accept has to be based on what is the likelihood of making a profit. So if we go back over to the stock market and we take a look over here, and again, this is just recent, so we're not going back like 100 years. This is just recent. If we take this move here, where we made a low and rallied, and we failed to make a new low here, that's pretty interesting, right? Nothing rocket science yet, but pretty darn interesting. And then the next rally comes, and we failed to push down again. So now you got to sit up in your seat. So now we actually have a 1, 2, 3, right? So we have a push up, failed. So we had this big move to the downside. So now shorts are covering. And by the way, we get a lot of questions about how do we recognize a short covering rally before that new buying kicks in. And it really comes down to this. Short covering rallies are typically fast. And if you think about why, let's use Rob as an example. Let's say Rob has a short covering, a short position, sold the stock short, it was going down, and Rob all of a sudden sees it's not going down anymore. And remember, this is what we talked about here. It should have made new lows and didn't. Rallied fast off the lows, did not make new lows. But during this rally, Rob's like, oh my gosh, it stopped going down, it stopped making new lows, and has a stop loss in it, and he's hitting the road and getting out. So what happens with short covering is versus new buying. Short covering are people existing positions and getting out. That's why short covering rallies typically fast. The pause that we're talking about takes a little bit more time to reverse it, but we gave you the exact level. So if we take a look at the most recent price action, rally, short covering rally, failed test. So now we have a 1, 2, 3. So now this level right here is the line in the sand that we're watching for. If that level gets broken, then we have another opportunity to be a buyer of stock again. Now, again, if you're a long-term investor, that's fine. We could be talking about 52-week moves, but kind of people that are looking to be in charge of their trading account, looking for cash flow month to month, that kind of thing. These are weekly opportunities, 2, 3, 4 weeks, maybe even monthly to get involved with. So if you're normally looking at price earnings ratios and all that kind of stuff, we're mostly talking right now about what's known as order flow and tape reading. And I do this for you every day. By the way, our next boot camp starts next week. If you want to learn about that, see if we're a good fit to work together, you can click the link below. And I do all this for you and with you every day. But now here's the fun thing where we saw the reversal coming off of the short selling. So we know that this is a significant level because that's where we rallied and that's where we failed. Now we just sit here patiently. Now what's kind of fun about this, and this is really going to be awesome. You can see actually here we rallied, broke that level, and pulled right back to that spot. Does that sound familiar? Well, that's exactly what we saw here in the SPY yesterday afternoon, where 1, 2, 3 rallied and pulled right back to that spot. So these patterns, once you spot them, you can't unsee them, and they actually become kind of fun to look at. So you can actually see the same exact thing. We finally broke through there after a couple of weeks of we failed, could not go down. Short sellers are scared now, and new buyers are starting to take a look. Push it through, pause, and then you end up getting this 3-week rally. And you're like, that's great. But how do I know when that rally's done? Same exact thing on the other side of the market. And this is all going to tie back into the best stocks to buy now. We're going to take a look at the energy stocks. So we rally, pull back, and now we fail again. So right there, that level right there is what matters. Now, what's super cool about this is the same way that we did this over here, where this level right here became significant weeks later. Look at how awesome this is, where this is where this buying pressure failed, right? Boom, boom, and that level right there. But now look at this 2 weeks later, that same level ignites another big move to the downside. So what I'm trying to get across to you is if the stock market has you scared right now, if the stock market is overwhelming and you just feel like you're lost, what I'm trying to do and what my mission is on these videos, obviously this is all for education, but I want you to learn to be back in control of what you're looking at. Remember this quote and write it down. When you know what you're looking for, you're no longer lost. So what we're talking about right now is spotting the order flow, which is the dominant side of the market. The second part is tape reading, which is that dominant side still valid, or how do I know it changed? If it changed, you make a different decision. If it's still valid, you may be adding to that position, or you may be just moving up a trailing stop depending on the market conditions. So how does that all tie into what we're looking at right now? Well, we have some momentum bullish price action in energy stocks right now, and momentum is very different from order flow. Momentum is just the most recent price action. Order flow has a little bit more time. So don't forget, the higher time frames dominate. When institutional activity jumps into a stock, they don't go in, let's just go get 10 million shares today. That's not the way it works. First of all, they'd be pushing the stock up on themselves. So what they do is, and you probably see this in what's known as time and sales, they're buying 100 at a time using the algorithm, or 1,000 at a time. And that takes time. It could take days, weeks, and sometimes even months. So our job is to spot how long has institutional activity been obvious in that stock. Is it an hour? Let's go back to yesterday where it was great, but it was only 2 hours worth of buying yesterday. But this 2 hours worth of buying is still in the context of this move to the downside. So what's kind of fun now in the market is we can map out exactly what we just talked about to have conviction. So we have that spot. We have this 360 level, or 355 level, which we've been watching for a while now. And we also have this move to the downside. So if you're confused about what's going on in the market right now, it is pointing down, but we've actually been neutral now for the better part of 2 days. So if you're finding the market a little challenging right now, it's going to sound like I'm breaking up with somebody, but it's not you. It's the market. The trick is to spot it while it's happening, pull yourself back when it's not obvious, and then know, like we just showed you, when it changed, when the road opens up a little bit and you can step on that gas again. And I want to say this. I don't say this lightly because I'm on video. I'm on YouTube right now, so it's being recorded. It's not hard to make money when you learn to spot and make decisions when it's obvious. We lose more money than we should because, number one, we blow our stop loss. We say, okay, that's where I'm getting out. And we don't. We just move it a little more, Raise your hand if you've done that. I've done that. I don't do it anymore because it's expensive. When we move our stop loss, that's one reason we have a hard time seeing our account grow month after month. The other one is we just don't have a roadmap like we're talking about now. But when you have the roadmap, you're no longer lost. And here's why. I want to explain this because it's really, really important. Imagine every single day in the market, you're not looking at everything. You're looking for something. When you're only looking for your edge, all of the other stuff in the market vanishes and you're just saying, that's what I'm looking for. When you get to that point, trading becomes infinitely easy, dare I say, infinitely easier because the stock market is no longer confusing. but you have to be okay with leaving everything else alone. If you're trying to trade every blip and move and up and down move and every piece of news that you see, it's gonna be hard. You're gonna get old gray hair like I do, right? You want the stock market to be simple and fun. And the only way that can happen is, number one, develop an edge. And an edge is what happens most of the time. Determine how long that edge is valid. How long has that edge been going on? So when we say edge, buying or selling pressure in the way that we look at it. So now we're going to tie that back into the energy stocks that we're looking at right now and a couple of other stocks in healthcare. So the energy sector stocks right now have had really strong bullish price action, but only for about a week and a half, and their recent levels that they need to clear. Yesterday, they opened lower and reversed, which was the first sign of the price action we were looking for. We game planned for that yesterday. Now, a lot of them need to show more than one day. This is the thing. When you're leaning into price action and looking to be a buyer in this case, has it been going up for an hour, 2 days, 2 weeks, 2 months? Those are the things we need to determine. The more you got to think about price action and charts a little bit different. And this is actually a really big thing. When you're looking at this, whether it's on the daily chart, whether it's on a weekly chart. And by the way, for the swing trading side of things, we're typically looking at swing trades. You have to look at this and visualize. Let's use John as an example. Let's say John owns a big hedge fund, right? John's hedge fund is actually creating these charts by spending money. So when you're looking at a chart and let's say it might be going sideways and in the middle of nowhere, or even take a look at Tesla stock and it's actually going down, you have to say that somebody with a lot of money is doing something. So you should forever not just say uptrend or downtrend. Order flow is the phrase that we use because when I had my trading floor in New York City, we had 24 New York Stock Exchange specialists come and trade in my office in 2007. They learned, and that was their job on the floor of the New York Stock Exchange, where they would take orders from institutions known as order flow. The better job that they worked that order flow over days, weeks, and months, the more order flow they got, which was more commissions for them because they were filling those orders at good prices. So what we do and what we teach is all came out of my office in New York City. That's what the New York method is. I was trading NASDAQ. They were trading New York. So we combined momentum trading and order flow. So that's where tape reading and order flow comes in. So once you understand order flow and tape reading, and now you're visualizing on the charts, there's real money being spent or dumped by what we see. So you should no longer just be saying uptrend or downtrend. You should be like, okay, what price is the market having a hard time getting through? Or the stock, like you can see this right here in Tesla. Buying pressure is having a hard time at 310. Now, on the other side, we're same exact thing down here, right around 210, 220. So when you look at the charts, you have to be saying, does order flow stand out? If the answer is yes, the next question should be how long? Then the next question is, how do I know if it's still valid? Once you have those questions, and you got to understand how to spot this in real time and do scans and trust the edge over time, that kind of stuff, trading just becomes magical at that point because then it's really just a question of, can you just follow the plan? That's really what it comes down to. Trading is not hard. Trading becomes confusing when you're trying to use everything. Dial it back, focus your strategy, focus on what you're looking at, and I promise you it becomes a lot easier. The part that we mess up is when we let our ego get in the way, when the order flow has clearly changed and we fight it. And we're like, no, I'm right. The market's wrong. And then that thing just keeps dripping against you. And all of a sudden you turn what should have been a reasonable business expense for your trading account into a monster loss simply because you let your ego get in the way. If you do it the way that we do it, it's all about some trades are going to make money. Some trades aren't going to make money. But if we do our job, keep the losses reasonable. And then the next step, which takes a little bit of time, is understanding how and when to hold your winners longer. That is what will make you somebody special. And you'll be like, you know what? I know you guys are all frustrated, but I know what I'm looking at. I stayed away from the market in this situation. I jumped on in that little situation. That's what will make you have so much conviction in what you're looking at in the market, not because you can predict, but because you know it's probably going to happen next. and definitely what you're going to do. So remember, everything is if this happens, then I plan to do this. So if we kind of work that way over into the energy stocks that we've been talking about, there's actually a pretty decent list that we're going to be focusing on today. So APA, again, how awesome is this now? Just like a really quick thing. So we just talked to you about order flow and real order flow coming in. And there's certain times order flow can keep pushing and there's no sellers. And then there's other times where you'll see sellers are stepping up and the bullish order flow can't get through that price. So now you have to say to yourself, okay, there's buying pressure, but the better trade is when buyers can finally push through those sellers. So what price is that? When buyers with deep pockets can get it through that level, that's when I'm going to get involved. That's when it's going to have my attention. So we have recent buying pressure that needs to get through recent levels. When it does, that road's going to open. So specifically talking about energy stocks, we have to talk about crude oil and the crude oil downtrend, the selling pressure that has now broken. And 95, again, how significant is this level? You got to watch crude oil and see if it gets above 95. If it does, these energy stocks that we're talking about right now, again, look at how obvious this level is, and you can see where it's having a hard time, right? So we got bullish price action. You got a push and a pause, right? Got to get through these levels. So we got APA, same thing, right there, obvious levels, and some room to go through there. You got APA, BTU, EOG, XOM, and COP. Again, you could see all of the recent price action, bullish gap, and now pause, right? SLB and FANG. So you can see, again, some recent buying pressure. So that's the list of stocks that's actually in my game plan right now. That's a small part of the list. We have a much bigger list that I give to the community every night. The big thing, if you happen to be on the day trading side of things, and quite frankly, if you're on the investing side of things as well right now, maybe a little bit longer term, we have the PPI, CPI data, inflation data is coming out today, which, if you know, the inflation data is big because that's going to influence what the Fed does. So futures are up a little bit right now, but we're waiting for inflation data. And this is actually pretty important right now, too. The Fed minutes discuss what happened to give a little more flavor from the last Fed meeting. So we kind of have a whirlwind of the Fed right now around the inflation data that's coming out this morning, roughly about a half an hour from now, actually. So the big thing here is that inflation data is going to affect the next Fed meeting, and they keep talking about stepping on the gas and interest rates going up, which is obviously bearish for market, especially for tech stocks and growth stocks. The other part is that the Fed minutes from the last meeting are most likely going to validate, again, getting back to validating, is it still obvious that they plan to step on the gas? So we could have a double bearish whammy today, where if the inflation data before the market opens is not what people want, the SPY, the S&P 500, most likely going to go down through that 360 level, and 350 is the next level, just to give everybody insight on that. So if we go over to the SPY, the 360 level has been the big level that it just keeps hanging out at right over here. And then the next level, you can see we're literally right there. How funny is that? The next level through that we're looking at is down around 350. So here's the game plan. If the pre-market inflation data is not perceived as bearish, in other words, it's perceived as good, we can lean on that 360 for short-term active trades. If the bearish CPI data comes in and we crack 360, we have $10 worth of profit potential to the downside. Now, if you happen to be on the day trading side of things, the Fed minutes come out, which you're going to talk about the last meeting. That could add more fuel to the downside if they validate and continue to say they're going to step on the gas. And we might actually even hit that number today. So there's a lot to absorb. But what's kind of fun about this? 90 minutes before the market, we already have the game plan. Remember, what's likely to happen and what am I definitely going to do? So we just mapped out both sides of the trade. Now, here's the thing that a lot of people miss, and this is really super important. The bearish order flow is the dominant side of the market right now. That means for me, if I'm trading with the dominant side of the market, the expected move in that direction is likely. So I can be a little bit more aggressive because I'm trading with that dominant side and I know my expected target because we're already going in that direction. That's probability. I'm not predicting, it's already going in that direction. If the market finds a bid, in other words, it stops going down and we hold that 360 level, then for the rest, and the Fed minutes and the inflation are not bearish, in other words, perceived as good, then if we look to be a buyer, for example, like the 2 hours that the market rallied yesterday, we'd like it to be more than 2 hours. We're trading against the move to the downside, which is different than if we short sell, we can be aggressive because we're going with all of that institutional activity. If the market rallies, it's very short term in nature. So all of that institutional money has not stepped up yet in a big way with buying pressure. So if we buy based on short-term price action against that move to the downside, for me, that would be less risk because it's short-term in nature. Then we go back to what we talked about at the beginning of the call. Do we see one of those reversals that validates the short covering is done and new buyers stepped up? If this kind of stuff is new to you, I'd suggest two different things. Number one, our next boot camp starts on Monday. It's 14 days. You get this from me all day, every day. You get my strategy, and there's a money-back guarantee. So if you don't think I know what I'm talking about and you want to come in and join me and go through the whole strategy, you have 5 days to make a decision. So click that link below the video. I'd love to see you next week. We do this kind of stuff every day. The other part is I'm going to challenge you now a little bit. We just mapped out all of the price action of what we're looking to see, if it's valid, if it changes, how we plan to trade both of them. Map that out today and see how it unfolds and trade it with that in mind and think about the appropriate risk because of this situation. And I think that your mind will open up to say, wow, this is so much easier than I was making it. Now, the next step to that, though, would be you need to see different market conditions so you could make these adjustments and decisions as the market's unfolding. So the way that we call that is we need more screen time together so we can see good markets, tough markets, obvious markets, choppy markets, and then make those decisions together. We're like, no, we're in stop and go traffic. Let's go get coffee. Or we're in a wide open road. Let's step on the gas, and then we'll determine how we use a profit maximizer to make as much as we can. So again, remember, the market is simple as you make it. It's when you're trying to see everything, that's when it gets confusing. So you're not dumbing it down. I want to be clear about that. You're focusing, which is a very, very big difference. And think about this. Who makes more money, a general practitioner or a specialist? You want to be a specialist. You want to say, that's what I'm looking for. And when I see that order flow, I now know exactly how to interact with it. When that order flow changes, I also know what to do. That's kind of cool. And that's where you separate yourself from overwhelmed and confused chart reader to somebody who's a trader and knows exactly what they're doing. And it doesn't matter what happens next because you're always going to know what you're looking for. All right. Hope that helped. If we did a good job today, do me a favor, give me a thumbs up. If you want to learn about the boot camp, there's actually a training video on that as well. Click the link below the video. Have an awesome day, everybody. Thanks so much for joining me. I really, really appreciate it. Take care now.